Hi guys, sorry for sounding like Thanos in this video. I've got a bit of a sore throat going on. But it's not going to be as sore as Jay Powell's headache after seeing that inflation report. This is really, really not good news for monetary policy outlook, meaning interest rates being cut. Here's the data, like, just to get straight into the content here. Here's the data we had just printed. These are the 4 key numbers you need to look at right here. This one, this one, this one, and this one. What just happened was that undeniably now there's evidence that inflation, at least in these broad CPI measures of inflation, that things are starting to get sticky. We're not seeing it come down that much anymore. So what we saw was core inflation once again come in sticky. So no progress on core inflation from the previous month. So core inflation is just like inching down, and no progress coming for this reading isn't fantastic news. And here we can see on the month-to-month readings, this is just not this is just not what we want to see. I'm sorry to laugh, but it's like, it is quite funny because of the Fed speak we've had the last few months, where Jay Powell has sat in front of a microphone and repeatedly said, we see inflation coming down, blah, 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 on a sometimes bumpy path. What we've essentially seen since the fantastic June reading we had last year, which was released in July, is essentially this trend, I would say, up in these month-on-month readings on inflation. So that's just awful news for the Fed, and in turn awful news for the stock market, which we'll get to in a sec. I just really want to go over these numbers that we just had. This is month-to-month headline inflation, again significantly up since the end of last year. And on the year reading, here's what we have. Again, just continuing that trend where we had that fantastic June reading last year, and since then it just hasn't been able to break through that 3% barrier on the headline CPI. That's just not fantastic news, and I'm going to explain to you why if you're a beginner to the markets. So here's the global stock market index sort of readings. As you can see, this is UK time, so this is 35 minutes after the release. These are the US indexes, and you can see basically down. Bad news, right? Here's the S&P 500 continuous. Here's what we're looking at on the day. Just a sharp sell-off here on the weekly reading. Again, similar to what happened last week with Neil Kashkari's comments, just to remind you what they were. And this data we've just received really is going to add momentum to what Kashkari was saying. If inflation doesn't come down, the Fed has no choice. They have to keep interest rates high. It's a subject for debates on other channels perhaps, but this is just a markets focused channel. What you have to understand is high inflation is just going to cause more hawkishness in the Fed, which is going to cause the stock market to sell off, right? So this is what we're seeing. You see basically within minutes the stock market just took a little tumble off the cliff. This is probably going to continue to sell off a little bit today. This is still 20 minutes pre-market to the New York Open. So we'll see how New York responds at the Open. But you just expect stocks to sell off on this news. Let's see what currencies are. The dollar's probably jumped on this news. Yeah, here we go. Here's the dollar index. Yeah. You know, I laugh because I speak to some people who try and trade or try and invest without really tuning into macroeconomics, and this is the importance of macroeconomics on financial markets, right? Basically, all markets care about at the moment is the Fed. All the Fed cares about is inflation, high inflation, hawkish Fed, dollar bullishness, stock bearishness, right? And what I covered in the last video, which the thumbnail of this video relates to, is that sell-off we had so the stock market correction we had last year, where we had this 10% drop in between the end of July and the start of November. That 10% correction was entirely on the back of sticky inflation, strong growth, that awkward strength in growth and activity, stabilizing inflation with those readings failing to get below 3%. We had a pivot from the Fed, which basically said we are now bullish on the US economy, we see inflation staying hot and we're going to keep rates higher. That's basically what caused this 10% correction in the stock market. So now we're going to see if the stock market can recover from this data, which basically enforces the same point that we had at the end of, or midsummer last year, where strong growth, strong inflation, pivots from the Fed saying, yeah, those interest rates you're expecting, guys, they're not coming. Okay, the CME Fed Watch tool isn't loading. I wanted to show you guys, but it's not loading. So that's an update for you retail investors or people interested in economics out there. We just had a very, very hot US CPI report. The main takeaway is that core inflation stabilizing, really struggling to drop. In the last 6 readings, it's only dropped 0.2% on the year-on-year measure. Again, no progress from the last month. Headline inflation coming in above consensus and forecasts. What does this mean? It means the Fed is going to stay a bit more hawkish. It means that stock market performance is going to come under pressure. I'm not saying there's going to be another 10% correction. I'm not pretending to be a guru, but this just isn't good news for the stock market is what I'll say. But as you saw, it is good news for the dollar. Alright, that about wraps up the video. That's just a little squawk I wanted to send out on this channel. If you do like this content, if you want to stay informed, if you want these breakdowns explaining economics for markets for beginners, subscribe. That's what I'm doing over here. So thanks for watching, and I'll see you in the next one. Good luck.